Welcome to the Decrypting Central Bank Digital Currency webinar series. The project is run at the Financial Services and Technology Regulation Center at the Faculty of Law and Administration at the University of Warsaw. The webinar series and research project is driven by 3 researchers. Let's meet them.
Our webinar series is going to be composed of 5 parts, each of which will be covering different aspects of central bank digital currencies.
Carolina, what is the main motivation of central banks to introduce central bank digital currency?
So what are the main drivers behind the CBDCs for central banks? So in my opinion, first of all, how the countries and economies are using cash is impacting how central banks touch this topic. And we may think that usage of cash is declining, especially in the times of pandemic, but this is not true. There are some countries, some economies, when we see for many years the trends where the usage of cash is increasing and the number of cash in circulation is increasing. The Japan, the US, the Singapore, for example. And there are countries like Nordics, where the usage of cash and the amount of the cash in circulation is decreasing dramatically, especially in the relation to GDP. And why, the usage of cash impacts the CBDC implementation or potential CBDC implementation? Because the, cash management is costly. No matter what the people are doing with cash, are they holding cash at home? Or maybe they are making the cash transactions for payments. It doesn't matter. In general, the cash management is costly. And we have, and the drivers, the motivation behind the CBDCs, they are also correlated with the challenges we talked recently, the challenges, the payments challenges. So all the central banks, when they think about the CBDCs, they mention as one of the top priorities the payment safety and payments efficiency. And in general, payments efficiency relates to the cross-border payments, because we know that they are costly, and timely. But also for some economies, they want to improve the domestic payments ecosystem. By introduction of CBDCs. Another aspect mentioned by majority of the central banks recently is financial stability. Yeah, so the countries think, or central banks thinks that it could help in the digital economy to make the financial stability stronger. And what impacts this is the rising adoption of the private digital currencies. So we know the cryptocurrencies, we know stable coins, those are 2 examples of private digital currencies. And as their adoption is growing, the central banks starting to realize that maybe they can impact negatively the financial stability of the country or the currency zone, like Eurozone, for example. So this is another motivation. On the other hand, we have 2 different main use cases for CBDCs, the wholesale and the general purpose or retail central bank digital currencies. And the wholesale, they are interbanks transactions. So something we as citizens maybe are not aware about them on daily basis, but the impact on the banking industry for implementing those use cases based on CBDC could be enormous. Yeah. But this is more, between central banks and banks at the, country level or for the cross-border wholesale settlements. And here also the efficiency and safety is the main motivation. But in general, motivation to, it's easier to implement, and we will talk about this later, so I don't want to start this, discussion right now. But in general, those motivations and, potential impact in the large scale is lower. So the motivation for the wholesales are weaker in general than for the retail CBDCs, because from the retail CBDCs, we can say the whole economy, like everybody, could benefit or could be impacted in case of any risk will arise. And the retail CBDCs, they are, like the substitute of the banknotes or coins, so of cash. Yeah, so we can use them as we are using cash right now.
Okay, so as we can see, cash-based economies and low cash economies have very different motivations. Maciej, can you see other motivations, maybe looking from the different angle?
Yes, of course. We need to take into account the fact that we're living and making policy decisions based on two very important events that have taken place during the last couple of years. The first one is the great financial crisis of 2008, which exposed some aspects or some practices made by the actors in the financial sector that were not accepted by the society as a whole. The second one is obviously coronavirus and the fact that all of the economies had to be closed and placed into lockdown, which not only encouraged but really forced the central banks to come in and start acting in a very active way by introducing non-standard monetary policies. And knowing these two things, we can identify a number of other reasons, societal reasons and reasons related to an enforcement of non-standard monetary policy measures. With regards to the execution of non-standard monetary measures, we can find that central banks see central bank digital currency as an opportunity to effectively implement certain policies that have seen the light of the day during the recent lockdown, but which could be implemented in a broader manner, thanks to the fact that the whole circulation of the cash would be completely digitized. These measures, for instance, is a complete removal of physical cash from the circulation. Obviously, CBDC would be able to enforce such a measure. The other one is obviously quantitative easing, whereby the issuance of CBDC is definitely easier to execute than in the case of the current way, whereby central banks have to coordinate their actions in order to implement such policies at the same time. There is a new trend which was only considered as a theory a couple of years ago, but which became a true reality during the last couple of months, which is basically the introduction of universal basic income. And effectively, CBDC would be able to make it much easier to redistribute cash directly from the central banks to individuals, to the citizens of different countries who would become beneficiaries of such an issuance. Otherwise, we also have societal reasons, and the two general motivations which we have seen across all of the research papers from IMF and Bank of International Settlements was a need expressed by the central banks for execution of a more, I would say, effective financial inclusion policy, banking the unbanked. And the other motivation was related to a right of seigniorage, whereby central banks are looking at commercial banks as a potential competition in the context of issuance of fiat money. And CBDC would give them a possibility to take this monopoly back to themselves and be able to effectively issue money and distribute it directly to the economy without an intermediary of commercial banks, which is the current practice these days.
Mm-hmm. You both have indicated positive motivations, or at least arguments for introduction of the good. But what about the bad? What about the arguments against introduction of central bank digital currency? That's why maybe let's focus on risks. Karolina, what are the risks of introduction of central bank digital currency?
Very good question, Paweł, and I just noted a few things related to the risk when Maciej said, some positive aspects related to CBDC. So, as we looking on the implementation or motivation from different perspectives, also on the risks, we can look from different perspectives because the impact could be enormous, yeah? So from the political perspective, economic perspective, social perspective, and then the last one, but probably we could spend the whole day discussing this, is technical one. And but let me start from the beginning, from the social perspective. And Maciej mentioned this pandemic times, and I just read recently that on the one banknote there is about 2,600 bacteria.
All kinds of bacteria.
Oh, different kinds. I not the viruses, but the bacteria. So even from the safety perspective, we can think that maybe not using cash could be better, or how much risk is associated with using cash. But what are the risks associated with using digital money or central bank digital currencies? So also Maciej talked about inclusion, provide financial inclusion. But if just imagine that we would implement this digital currencies only, no cash. So how many people will be excluded then? What about exclusion in this case? Will we push people to use, certain types of the, digital wallets, mobile phones, and so on? Another concerns, or the whole group of concerns, they are related with the privacy. We know that the cash has this characteristic of anonymity. You don't know where the specific banknote came from, and who will be the next person owning it. This is the great privilege we have, that we, the money which are flowing cannot be tracked, at least the physical money. And in this case, the consumer's privacy, or in general privacy, is at risk, especially that if everything will be digitalized, it could be also hacked. And then we have like the, both technical risks and economic risk. Mm-hmm. What in case such system, nationwide, for example, would be hacked? What are the cybersecurity concerns related to this? So this is from both, perspective, technical and the economic perspective, even political. Yeah.
Geopolitical even.
Yeah. And for the political aspect, close to the economic one, this is also, how much we can track, how much we can force. Maciej talk a little bit about this from the positive motivation perspective, but on the other hand, what we can limit in case everything will be digitalized related to payments or money transfer. Mm-hmm. What about implementation of, like we have the intervention related to some economies, like in Iran or so on. Yeah, in case it could be forced economic basic income. Maybe the government can make the policy that you could spend this money only on a specific assets, so you cannot buy, for example, alcohol using this money, from the specific account. So I think there are like a lot of benefits, a lot of potential, good outcomes, but the number of risks, in my opinion, they are also enormous. And for me personally, I see a lot of, technical risks and risk related to the privacy as citizens, as a human.
Maciej, are there any other risks associated to central bank digital currency that are worth to mention?
Well, yes, of course. Karolina mentioned technology, and I think technology is absolutely crucial because it is going to form a foundation of CBDCs coming into circulation. And whatever benefits that technology brings can also be used or mismanaged intentionally or unintentionally. There are many proposals to use the distributed ledger technologies as an infrastructure for CBDCs. And these have or are known from having the main benefit of being able to track everything during the whole life cycle of its existence, from the moment when an asset has been issued through the moment when it was exchanged between a number of persons, a number of institutions, ending up with the redemption. However, this can also be used for effectively tracing the consumer behavior. And this is directly impacting our right to privacy, something that Karolina mentioned and highlighted, and I fully agree with that aspect. However, I would go one step further. Due to the fact that we are living in a reality whereby certain countries are effectively executing the right for surveillance of the citizens because of the healthcare reasons, because of terrorism, because of other illegal activities, CBDCs would actually serve as a tool for an effective execution of surveillance measures. Tracking and tracing our spending behaviors, our spending activities, tracking and tracing exchanges between different individuals, which basically means that the state would be capable of knowing that certain human interactions have actually taken place. But this also gives the state an opportunity to introduce individual policies pointing at specific persons holding a specific number or let's say collection of CBDCs, and therefore implement punitive measures for those citizens who are not behaving in a correct manner, so to say, such as, for example, individual interest rates, which you can then execute against a single unit of measure, but also other measures such as an automated redemption of a CBDC, which would basically mean that you're deprived of the money which is in your pocket without actually even knowing about it. There is also one very important aspect related to the technology that we have to take into account, which is related to the fact that it has to be mature enough in order to be able to sustain the amount of workload that it will have to serve in order to allow for all of the citizens to effectively use CBDCs in practice. Distributed ledger technologies are known from their characteristic of being very robust, but they're not very speedy, so to say. The time needed for an effective commitment of a transaction in a distributed ledger, if a CBDC would be based on a distributed infrastructure, would sometimes be far too long to become acceptable by the wider society, which might in certain situations reduce the scope of CBDCs into some specific use cases. Due to the fact that the infrastructure behind CBDC would suddenly become crucial to the whole society, any failings of that infrastructure would have very negative effects on all of us, and thus basically introducing potential systemic risks. So Karolina mentioned hacking. Obviously this system, when introduced, will immediately be exploited by the hackers, which is already taking place in public blockchains such as Ethereum or Bitcoin, where hackers are actively attempting to steal the funds or exploit the code vulnerabilities. Other aspect related to an introduction of technology is also impacting the society due to the fact that suddenly we will have to become responsible of our digital wallet. So the aspect of key management, the fact that we have to be the holders of the keys in order to actually own the digital cash, will also mean that we can very easily lose those keys, be deprived of those keys, or not even know that someone has actually stolen those keys and thus owns that wallet without us even knowing about it.
Maybe it means that in general user experience, related to the using digital wallets and key management should change to make them really, usable, but all people, yeah?
Exactly.
So, Paweł, as you can see, because you ask about we discuss the wholesales and retail CBDCs, and many of those risks we are discussing right now, they are related. Some of them they are general, but some of them, especially those related to the privacy, they are related to the retail CBDCs, not the wholesales. Yeah, because for the wholesales only, they will impact more, banking or interbanking transactions in generally. And what I would add to the Maciej points will be, how in generally CBDCs could impact the banking industry. Mm-hmm. Because by implementing the central bank digital currency, in one of the scenarios, we can eliminate maybe banks or their role. Because in the digital, world or digital, global nationwide banking systems, maybe each of us, we can have the accounts at central bank. Mm-hmm. And, will central banks, manage or willing to manage those accounts? This is a different story. But there is also, certain risk to the whole banking or payments industry, how they could be transformed and disrupted by introduction and implementation of CBDCs.
Mm-hmm. How important is the size of the economy? Maybe let's focus on our economy. We are not very big state. What should be the motivation of the state like the Poland or the central bank like our local one? What's your point of view? Main motivation of Polish central bank to introduce research on CBDCs?
I even will say not only research, but consider the implementation for all smaller economies, like Polish one, the motivation should be stronger, because in case some of the large economies will implement this and they will not limit the distribution of those digital currencies to foreigners, for example, it will be much more easier to own the currency and to make all the transaction in the digital economy by using foreign currency, not the national one. Mm-hmm. And it could impact our financial stability.
During the last couple of months, we have seen something that could have been considered as absolutely impossible just a year ago, which is a general adoption of digital payments by the society. Due to the lockdown, people were actually forced to use their payment applications, e-commerce, digital banking, online banking, in order to be able to execute their daily activities. And we all realized that it's not that hard to do, which means that, this brings me to an opinion that in the context of Poland, I think that the general resistance to an introduction of CBDC would be much weaker than in countries where cash is still used in wider circulation, such as Japan or Switzerland, for example. So I believe I am quite optimistic about the perspectives for introducing of CBDCs, but obviously the Central Bank of Poland will have to take into account all of the potential risk which we basically discussed about.
So thank you very much for very, very interesting discussion about the motivations, positive and negative, mostly positive, let's say. During the next chapter, we'll be talking about the alternatives of central bank digital currencies. Thank you.